If you're new to the channel, glad to have you here. I hope that I can teach you something that you're just not going to find anywhere else. All right. One of the things I'm going to teach you is I'm not a squiggly lines guy. I don't like squiggly lines all over the screen. That's the first thing. Number two, I look at just a few indicators. I look at a few things, and that only. And number three, I trade in the 30-day realm. All right, 30 to 60 days. That means I'm not a day trader. Means I'm not a meme trader. All right, I'm a rules-based, objective pattern trader. That's what we do here. All right. So, looking at the Dow, let's blow this chart up. I don't have anything on here except price. Right? Why do I use candlesticks? Because honestly, they're the easiest thing that I can read. Right? Green candle says that we closed higher than we opened. Red candle says we closed lower than we opened. That's the way the candles crumble here. We've had big move up through the beginning of the year. We had a pullback, a very healthy pullback on the DIA. All right, that's the Dow Jones Industrial Average. What you can do is you can take the Dow Jones Industrial Average DIA. It's 1/100th of the Dow. So when I see 500 up here, that means the Dow crossed 50,000. When I see 450, that means we drop down to around 45,000. It's close, but it's not exact, right? What's been happening recently? Well, we've been seeing a big move into last week, and this big move, April is really following last year's April. Do you remember last year? April, at the beginning of April ended down, and then we started shooting back up, and that ran pretty much last April all the way up until November before we saw any kind of real pullback. Yeah, we saw one in July, but that didn't last long. We had a bigger pullback in November, and of course, the huge pullback was what happened this year in February and March. Since then, we've nearly recovered everything that we lost, and the upside snapped up faster than the downside. That doesn't always happen, right? So we've gained a lot of ground in the first few weeks. SPY. Let's take a look at SPY. Now, what I've done here is I've taken the same chart for SPY, and you can see what's happened with SPY, but I've added volume to it. And the reason I look at volume is I like to see where the spikes all happen. Spike last August, followed a drop, a very quick drop, which became a buying opportunity. The spike that happened in October, big drop, it held, buying opportunity. And then again in November, dropped down, and then a subsequent rise, held. Look what happened down here in March. We had a spike that occurred. That was at about the third week of March. That was not the low, right? The low actually occurred with some lower volume, but from there ran up. So you had to suffer through maybe about 10 points of downside before the big move up happened. But we've been leaning into this big move up now for the last couple of weeks, especially those of you that have been following me and hanging out here on Patterns and Profits Live, or have you've been watching the channel. So got that big move up. Where do we go from here? That's the big question. All right, where are we right now in this particular pattern? Right, so we have fresh all-time highs that happened last week, and we got follow through on Friday. A little bit of a pullback today. We'll see where that ends up going. It's an inside day right now, but the day's still young. But you can see as I blow this out, look what's happened just in the month of April. There's your final day of March. April has literally been an up month, starting with the S&P down in the high 630s, and all of a sudden now we're in the low 700s. That's a big move. All right, so there you go with the S&P. And then finally, I'm going to show you one more, which is the QQQ, and I want to talk about the third indicator I added on, and that is volatility. All right, so you've got the same candlestick chart for the Qs. The Qs actually hit their high, if you remember, back in October of last year, and then again around the end of January. So we double topped there, pulled back. We blew right through that double top last week, and now the Qs are at new all-time highs as well. You can see the volume down here below, but this red line, right? I talk a lot about trading the red line. And the red line is implied volatility. This is what the option traders are looking at. And so what we like to see with implied volatility on the Qs, on the SPY, on the DIA is it's very inverse. What I mean by that is that when the volatility, when the red line's going higher, that typically means that we're seeing the market going down. When the red line starts to drop, it means we see upside movement in the indices. Now, every once in a while, there's an exception to that rule, but most of the time, when I see the volatility dropping, that means we're seeing markets moving higher. Where are we at right now? So if I take a look at this 1-year chart, we've seen highs, we've seen lows. The highs on the Qs have really kind of been in the high 20s. Yeah, we spiked up here into the low 30s back in November of last year, but we've been kind of hanging out 28, right? That was June of last year. Here's 28 again in October, 28 again in November, 28 again just last month in March when we were coming down on these fresh lows. What's happened since then? We're down here around 25. Where are the lows? The lows are down here around 20. So if that's the case, then we should expect this volatility to drop, right? No guarantees. We should expect this volatility to drop. What happens when volatility drops in the market? You see things like the Qs, you see things like the spiders, you see things like the diamonds, all right? The Qs, the spiders, the diamonds, oh my, they're likely to head higher.